The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the day with our DAX chart like we usually do. As you can see, we were looking at some type of a topping formation that has certainly started to work. At least early this morning, but the ones I wanted to focus on were these footsie charts that we've been talking about because we were making such a big pattern up here in this footsie. I'll bring up the daily to take a look at it, and we'll be able to look at it right here. There we go, and you'll be able to see that that's the daily chart, but the one that's the most interesting that was sent to us by our good friend Alan from across the pond. Let me bring up this 15-minute chart because it really shows a beautiful, well, several beautiful patterns in the footsie that you'll be able to see relatively easily. But you'll notice here we went up to a perfect 78% level. Also 61% retracement of the previous. That's a 135 pattern, folks, nearly perfect. It's already started to break down quite a bit below the old low there at the 78% level, so it looks like it's headed lower. Whether that's going to be the case or not, you know, I'm not sure. Now, the number one question, in fact, it was the only question that I got over the night, was about Tesla. What is my opinion of Tesla? First of all, I will not trust a car that you cannot hear. I think it's a nice-looking car, but if you can't hear it, I don't think I want to have anything to do with it. But I don't know. It's just too quiet for me. I actually think that the let's get to the technical part. In my opinion, doesn't mean anything. Just get this chart up here for Tesla to take a look at it here. We're going to go back and look at this here. You'll see here on Tesla going back to last March, you'll notice that you'll see the double ABCD patterns that were up there. That was the actual high up around 382. We made a double top at 389. If you'll see that, pay close attention to that because we're going to walk through this. Oh, my first car. My first car was a 1949 Mercury. It was owned by a neighbor in the neighborhood, of course. Anyway, they didn't drive, and it was covered with mice and everything else, but it was a nice old Mercury, and of course those old flathead Mercuries, and my buddies knew how to pull those engines apart. I bought it for $200. And we took it apart. Well, they took it apart, and then they repainted it, and it turned out to be a really nice car. I had it, for about 3 years, and then I got a 1956 Volkswagen Bug. And then after that, the old Silver pulled in towards me, and then I got a I got a Porsche. Anyway, it was a 64 Porsche, 1964 Porsche SC Roadster. Anyway, let's take a look at this. That brings back a lot of memories. Let's look at Tesla here. Look at the patterns in Tesla, folks. Like we just pointed out, the double ABCD pattern up there at 389 back in June. In September, it goes up and takes out the high by about 10 cents, making a double top. As you can see, that's a 3-drive pattern. And then it goes down, and then it rallies up, and then it's made. We're in a downtrend now, folks, because we have lower tops and lower bottoms. We're trading at around 278 this morning, and that is down from 303 as of the close the other day. The news is coming out bad, and here's where the question came from, is how do you handle being in positions that have these huge rallies when you're short or huge declines when you're long? Well, the way you do that is you have to have a trading plan and stick by it. I mean, it's just, it's truly amazing that some people are able to do that. And boy, you don't learn it by accident, folks. You take it in baby steps. You've got to learn, to do this. Remember, back in the old days, we didn't have this electronic stuff, and we didn't see our equity every second to see how things are moving. That's actually a very bad thing, looking at how much money you're making. In fact, the only 100% absolutely fail-safe trading signal is the Larry Williams telephone indicator. And this goes back a long time ago. And it was one of his seminars. He said, the only thing I know for sure, he says, it's 100%. He said, if you reach over to your calculator and you're calculating how much money you're making, he said, pick up the telephone first and get out, because your greed index just absolutely hit the absolute greed button. So if you start doing that, you remember that your greed button is working, and you want to just get out of it. But looking at Tesla here, there's all kinds of news today. Jim Chanos is very heavily short. It's the most heavily shorted stock in the New York Stock Exchange, and some people have an opinion of it, and that's certainly okay, because some people think it's not worth much, other people think that it's worth a great deal. But this is what you have to do: is if you're holding it for the long time, you can't be concerned about 20 or 30 or 40 or even $100 rallies here, because if you're looking for the thing to go to $10 or even zero, that means absolute nothing in the long run. I'll finish this up in just a second. Because I got another example. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we were talking about position sizing and being able to hold positions for really, really long moves. And I think I've mentioned this story before, but for those of you that have never heard it before, I'm going to say it again and also tell it again. And also, I enjoy telling this story. When I traded at the Merc, I would come in real early in the morning, and I was trading through Lynn Waldock, and I would always stop and buy a couple dozen bagels for the office help, because they were always working hard, and most people forgot them. And so I would always do that in the morning, not every day, but about 3 days a week. And on this particular day, I was going up in the elevator, and Reggie, who was the guy who delivered all of the equity runs for everybody to show what the positions were, what margins, calls, excess capital, and everything, he would carry these to each of the floor traders and give it to them. And so he was on the elevator, and he had this huge stack. It must have been about 10 inches thick. And I said, "Looks like you got a lot of deliveries today, Reg." And he said, "Larry, that's just one account." I said, "Get out of here." And he said, "No," he said, it really is. I said, "Reg," I said, "I'll give you $50 if you let me look at it." He looked at me and he said, "For $50, you can have it." I gave him $50, and I put it in my briefcase. I took it home that night, and I went through the whole thing. I mean, the guy had thousands of positions on, and the name of the trader was Bill Shepard. His badge number name was SHEP, Shep. He was well known. He was just a really nice guy. Always had cowboy boots on. But I went through that to see what he was doing. He had positions on in the British pound that he had sold for like $3.30, and it was trading for like $1.90 or something at that time. I mean, these were huge millions and millions of dollars. About 15 years later, I'm at a meeting at the Money Show in New York, and I'm on a panel with Bill Shepard, and he recognized me, and I told him the story about that, and he laughed. He said, "Larry," he said, "that's why I bought my own clearing firm." He said, "Because people were always wondering what I was doing." And I said, "Oh, I felt bad about that all those years." He said, "Oh, don't let them." Hey, we got a caller. Let's get to business. Mr. Z from Philly. John, how are you?
So did he include you in partnership with that clearing firm?
No. He's still going strong. I'm still in contact with him, but he's scaled back quite a bit. He's doesn't have a family or anything. It's basically trading has been his own life. He doesn't care for planes and boats and stuff. He's got a ranch and he likes hunting and stuff. But he's just an old country boy that, just made it really big. He just has a really good grasp of long-term fundamentals, and it'd be like a deal with Tesla. He thinks they're going to go bankrupt, or he thinks they're going to go to $1 million a share. He'll stick with that until he's right, and he hangs in there, for a very, very long time. So that's the main thing.
What is it with you floor traders and boats?
Oh, no. Well, we're smart. If God wanted people to be on boats, He would have given us gills and fins. But I don't think so. That's not for me.
Hey, Larry, I wanted to ask you this question. First observation on COMEX gold and silver this week. Lows occurred at 1302 on the gold and 1607 on the silver. My question to you is, what price action do you need to see, like patterns or price levels above, to lead you to conclude with some degree of confidence that those lows were in fact bottoms?
Well, John, I haven't seen that yet. So far we rallied about $15 off the bottom in the gold. Silver's rallied about 50 cents, but I haven't seen anything like that as of yet. I put up the 60-minute chart. You can see that compares the gold and the silver. Silver's actually outperforming gold right now, but that's not unusual because they share back and forth. Sometimes you'll notice back on the 19th of April, silver was really strong and gold wasn't, and now we're seeing the exact opposite. What I'm looking for, John, and that is I would have to see a move of about $35 to $40 in one day in gold. I mean, just really strong, and then continue on the next day. Then I would say, yep, that's it. But I still believe if we take a look at this long-term silver chart, and then we'll also look at the long-term gold chart, you'll notice this silver chart here on the daily has got a really nice pattern down about 60 cents from, well, yeah, about 70 cents from where we are right now, down at that 1580 level. But you'll notice that it held that 786 level 4 times. You pointed that out just the other day because you were buying silver down there at 16.15 in the day, and I remember you putting that trade on, and it's worked very, very nicely. But for a longer-term basis, I still think we have a chance to take this out one more time, and that would be the trigger. The number I'm looking at in gold is $30 lower. That's at the 1288 level. That's the 61% retracement of that whole move. And if we get to there, then I'd really have a really good interest in it. But with this inflation that they're talking about now, if there is such a thing, that might be the reason for gold and silver perking up. But right now, I just have to wait. I'd have to see some really strong action. I mean, just and continue to, then that's really what this is. We're talking with Mr. Z from Philadelphia, folks, and the man walks his talk and he knows what he's talking about. I hope that helps, John, but that's what I'm seeing. I don't know if you're seeing the same thing or not, but there is a possibility that bottom was made. I don't know.
Larry, thank you for that description and discussion. I'll share this 3 points, care to share with you and your listeners right here. One, I as a student of markets and a trader, I have never invented anything on my own. It turns out I'm just not that clever. So I've relied and used teachings and clever inventions of other people. And first, when it comes to this silver chart that I'm looking at in Tiger TV as we speak, I'll observe 2 features. One, a feature that is a real-time application of one of your tools that I learned from you way back in 2008, and that's the utility and value of looking at Fibonacci 786 retracements. And I will point out, Larry, the cash silver market from December to January rallied 1562 up to 1770. The exact, literally, Larry, to the penny, the exact Fib 786 retracement of that move is 1607. 1607 is the exact low of July silver last, I guess it was Tuesday. Point number 3 is a tool that I have used, taught to me, and anybody who cared to listen, by Jim Flanagan, a man that you know out in the Los Angeles area. And Jim had taught me many things, and the one that comes into play here is this concept of bear trap to bottom. And I'm looking at your daily chart for silver here on Tiger TV, and I observe February into March 3 lows on the silver contract. I will then observe that the low on Tuesday.
Oh, John, we got to pay a few bills. Could you stay with us till after the break and come right back with us and continue this on? This is very interesting. Please do.
Certainly would. Thank you.
Thank you, John. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. We're talking with Mr. Z from Philadelphia about the importance of the 78% level in the 78.6 level in the silver. You want to continue on, John?
Yes, I was just concluding, Larry, with the last tool that comes into play that I learned from Jimmy Flanagan, who's at GAN Global Financial out there in Los Angeles area. Anyway, Jim long ago taught me and others of the utility of a pattern known as bear trap to bottom and bull trap to top. And that merely means a market which, in this case, a declining market, silver in this case, has been declining, made multiple lows in a certain area. And in this case, it was silver February and March 1615 to 1610. Then a bounce. And then a bear trap to bottom pattern is one in which those lows are penetrated, which happened Tuesday in July. Silver undercutting 1615 to 1610 with a 1607 low, and then reversing right back up. And what you're dealing with there, as Jim Flanagan had taught, is sell stops on longs were resting right under 1610. Those sell stops were elected by weak-handed longs, stopped them out, and then no more sellers left. The market reverses right back up. So people who saw this were sitting there saying, okay, fine, if they run the stops under 1610, I've got my buy orders there. But incidentally, I was not one of them. But that's what you see happening. So the Fib 786, the bear trap to bottom pattern, and now we're up at 1654. In other words, almost 50 cents higher. I speculate that 1607 was a bottom that holds. So there we have it.
It certainly could. Now, John, I posted a chart for platinum because I followed this on the the weekly charts for the weekly newsletter, and I was looking at that bear trap phenomenon last week because it looked like that's exactly what happened in the platinum. However, on Monday, the market reversed and went down and snapped the bear trap, and I ended up taking a small loss in the gold because once it broke that, it told me it could possibly go a little bit lower. Actually, the gold, I had to stop in at 1310, and it's higher than that right now, but based on the patterns that I was looking at, that was the maximum amount that I wanted to risk, which was $6 a share or per ounce. And so, but that bear trap is really a very, very important, because when it comes in and it works like it did back in July of last year, boy, it was really a monster. And I still think we got this really bull market coming in gold and silver, and the worst thing you can have is standing on the sidelines, wishing you were in a market. But as Amos Hofstadter said, it's much better to be out of a market wishing you were in than in a market wishing you were out. So I'm just waiting to enter the gold market again, and we'll see how it ends up. But hey, listen, I want to thank you for calling in. You got great information. Keep up those super trades that you have in the den, and everybody really appreciates it, John. You're a real pro, and we certainly appreciate all the time you spend with us at TFNN.
Thanks for that input on silver, and in signing off, thank you for identifying that coffee chart. I'm long. It's rallying nicely. Thank you again.
Hey, thank you for the cocoa. You bought cocoa on January the 8th at $18.45, and the last price I saw was $28. And I think you got out at 26 and change, didn't you?
Lower than that. I didn't ride it as well as I should have. But
well, that's always, there's only one person that gets the high or low of the day, and that's God, and she doesn't trade as often as you might think. So not many people get that exact
kick.
Good
day to you, Larry.
Thanks a lot, John. You bet. Mr. Z from Philadelphia. Okay, folks, we got the market opening. We were down a little bit. We're probably going to have a little bit of a rally this morning. We'll have to wait and see. The bonds are still going up. Gold is up pretty good, up at the 13.15 level. It's interesting about the gold. Let's just bring this up here to show you, because I follow gold on a daily basis. Here's what I was looking at this morning. We've had this. This is over the last 4 or 5 days, but you'll notice the high that I was forecasting today came in at 1318. That was nothing more than the 78% level of the swing we made on April the 30th, and that hit that exactly at 1318.10. We're trading at 1315 right now, and if we get above 1319, then we're probably going to go higher. But at this point, it looks like there's a possibility that we could back off a little bit in the gold. I still think that we've got a chance to see the gold and silver wash out one more time before we go higher. But if I'm wrong, we'll have to find out a better place to enter the market from the long side. But that's what we're looking at right now. Regarding the grain markets, we talked with Cy Monley, of course, on Monday, Rich Anderson on Tuesday, and one of the things that we're looking at was, of course, that this corn that we're looking at, this December corn, had some really strong resistance up here. Let's just get this up here so you folks can take a quick look at it. Up here at this 423 level, and we hit that 422.5 yesterday, I believe. We've sold off about 4 cents from that level. So there's a potential of that ABCD 3-drive pattern in Christmas corn completing here this week, and then we'll watch for another retracement to the downside. But these higher bottoms have just been absolutely perfect. The first one was a perfect 78% level. That was on April the 7th. Then we had a 61% retracement on April the 23rd. And since that time, we've been going higher. And here we are into May. The crops are starting to be planted, especially for corn and beans. And we need to be watching the weather. And as we know, the weather changes like the wind, so we have to pay attention to what's going on. Fortunately, we have Rich Anderson and Cy Monley give us some really good ideas of what's going on with the weather, as long as Mr. Z is too, because he's in the den during the day updating what weather patterns are looking at, in fact, all over the world. So it helps when the fundamentals match up with what the what the charts are telling you that makes it a lot easier. It's never really easy, but it makes it a little bit easier when you had the fundamentals line up with the technicals, and that's what gives you a pretty good idea of what we're watching. We've had a request here to take a quick look at Bitcoin. Bitcoin's looking bullish, folks. I just wanted to show you here. This is the updated chart. You'll notice that we topped here about 9 days ago, but look what's happened in the last 9 days. We topped at 9,800. We went down to 8,800, and we're trading at roughly 92.62 this morning. That's 10 days of sideways action. Go back on that chart and find me another place where you had 10 days of sideways action. You'll see it. It's right down here at the bottom when we were at 6,600, and that's what it did. It went sideways, and what did it do? It exploded to the upside. So if we can see Bitcoin above 10,000, this is going to be a really positive sign for cryptocurrencies if we get to that level. Now, next week, I'm really hoping to have John Jameson on again, because he has written an article for one of the major newspapers about the weaponization of cryptocurrencies, and it is really interesting, and he's going to hopefully chat with us about that and what it really means, because he believes that this is the internet on steroids, and it has some good and bad things. But we'll see. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I wanted to put up a chart here of the euro. This is a 15-minute chart. I like looking at these because it's like watching a little mini cash register most of the time. But you'll notice here that we had this really nice butterfly pattern and ABCD coming together, and it just absolutely failed. But that's not the important thing. The important thing is that what happened after that. You can see the patterns that have been lining up since that time. There have been some really nice tradable patterns in here, and with the euro, you're dealing with something that doesn't take a great deal of money to do it. I mean, the day trade margin on the euro is under $400. I mean, you can control a $100,000 contract for under $400. I mean, that's tremendous leverage. Now, leverage can, bite you on the kabuki if you're really not careful, but using a 30 pip stop is pretty easy to do with the euro. They don't run stops in the euro. These things are so big that they just they trade very beautifully. But you can see how it follows some of the patterns. We see the same thing in the yen and pound and all the others too. But that's one of the things that I do to try to keep busy during the day. Remember, years ago, we didn't have this kind of stuff. I traded off a ticker tape. I had a board of trade ticker and I had a CME ticker, a Merck ticker. And, they would fill up these baskets every day and I'd put them in the trash. But that's mainly, what I did for all those years. So, the problem that you have to do is you got to keep busy during the day, and that's one of the reasons I was able to write as many books as I did, is because I would keep notes, and I don't like watching the monitor. After I do this show in the morning and I'm not watching the monitor during the show, I watch it maybe an hour a day, 10 or 15 minutes at a time. If the alerts go off to tell me that something really exciting happened, then yes, I'll say, okay, I'll take a look at it. But other than that, I'm not really interested. Now, the reason why I'm bringing all this up, because I had a lot of people, not a lot, there were two people that asked about, we have these 300-point rallies in the Dow. And it really doesn't mean very much, folks, if you're in something for the long term. Just take a look here at this Dow Jones chart here. And when you look at this, this is the daily. You'll notice here that, the potential that we're looking for is the Dow to drop to 22,170. We're at 23,000 and change right now. That's 10% lower. If you think it's going to go to that level, a 300-point rally in the Dow means absolutely nothing. But it's hard to think about that, when you're watching the monitor and your little cash register there in the lower left-hand corner is showing that the money is being taken out of your account faster than a tornado going through Oklahoma. It's hard to do that. That's why that's not a good thing to watch what your equity is. I mean, just that's not an important thing, because you can't think in terms of money. You got to think in terms of patterns, because money is how we keep score, but the patterns is what we depend on and to tell us where we should be. At least that if you do pattern recognition, that's what you're supposed to be doing. So try not to watch the monitor all day long. And if you do, watch something that you're not in. If you're in the S&P, go watch crude oil or something like that, or go watch gold, something like that. That's the main thing that you want to be keeping an eye on. That's my 2 cents worth, and believe me, that's what you have to pay is 2 cents. So keep that in mind. That's something that's very, very important. A good example of that is Facebook. Let's just pull this up because, we were watching. Here's a perfect example of Facebook. I don't know where it's trading this morning, but this was a perfect trade that we had, beautiful 135 pattern. I noticed yesterday that Facebook went up and took out the previous high from 0.5 3 days ago by about 7 cents. It went up to exactly 176. I think it went to 176 or 177.10. We had 177.10 or something like that, and that's why we were selling at 175 with a stop at $79 a share. That means absolutely nothing. I mean, I know it went all the way down to 169 and change and then snap back, but if you're playing for something big, you can't think in those terms. That'll really mess up your thinking. So you've got to be able to stick by your trading plan. Amos Hofstadter, the fellow from Commodity Corporation, he used to have a little plastic plaque on the old monitors that we used to have, and all we had on the monitors was just a flashing price. We didn't have charts or any of that stuff, and it was the monitor, the little plastic plaque said, has your opinion of the market changed? It was either yes or no, and it says the market reached your objective, yes or no. If you could answer yes to either one of those questions, you could exit your position. But if you couldn't answer yes to those positions, you couldn't exit your position. And so that's an important thing, that was his anchor, to keep him in positions. And believe me, he would hold things for a 3-week rally against him, and like it was absolutely nothing. It wouldn't even bother him at all. And if you ever watch the tape by Tudor Jones, when he's visiting there with Eli Tellis, he tells the story that Eli is visiting with his customers down there in Memphis at the Cotton Exchange. And the positions are going against him everywhere, and he's acting like nothing has ever happened. It's just as calmness that you could possibly be, and that's what you have to do. You got to be calm in the midst of a storm. Not an easy thing to do, and the only way you can do it is by baby steps. And the first step would be to buy Mark Douglas's books, The Disciplined Trader, and then, of course, Trading in the Zone. His new book is fabulous, too. If you have an interest in that, you should get in touch with Paula Webb. She's continuing on Mark's education, because she was with him for 35 years and did a lot of this, the proofreading and stuff, so she knows the whole stuff, and she's got some really great information, too. But that's what you have to do, is you've got to practice the mental part, and that's the hard part of trading, because that 9-inch cycle from ear to ear is the one that really is the one that makes you think about, where you are, with some of these things that we're watching here. So pay attention to those. I think if you'll watch those mental things, you'll be far better off than if you don't. That's the key to watching some of these things as we see them here in the morning. So that's what we're keeping an eye on today. We got the gold up around 13.16. The high's been 13.18.10. We've got the bonds up around 143.20. We still got a chance for those bonds to get up to the 144 level. Whether they're able to do that or not, we'll be able to see that. There's some support here in the euro at the 119.60 level. We're trading at 119.75 right now, but if we get below that 119.50 level, we're probably heading towards that 106 level would be my guess. So I don't know if that's going to be the case or not, but we'll have to watch it just to be safe, to see where we are with some of these things as we're keeping an eye on them this morning. Okay, one other question that someone's asked me, and that is about General Electric. I wouldn't touch General Electric, folks. The chart has had a little bit of a bounce, but that's a perfect definition of a dead cat bounce. I wouldn't touch it. That's really what you're looking at there is something that's going to have to be fixed. I don't know how they're going to do it, but they'll have to figure out something about it. But we'll watch it anyway to see what happens with this. So that's the main thing. So 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted a chart of the crude oil here on the daily chart that this is a support that we're looking at for this week. Here we are on Thursday. We've come down and we've hit that level now, rallied a little bit off of it, so there should be some key support. Any move below that 66.50 level per barrel in the crude oil, to me, would tell us that this is failing, and we've probably made a major top up here. You can see the multiple ABCD patterns that occurred up here at that $69 a barrel level. We had one from February, March, and April, another one was from March and April, double ABCD patterns right at the same level. That was a little bit of a confirmation that there should be something, really big happening at that point. So the key level to watch in the crude oil is the 66.50. Now, we had some negative news, potentially negative news yesterday, and the market took it in stride without any trouble at all. The stocks were much higher than anticipated, but the market didn't go down. That's another reason, you have to be very careful from the short side here, because when good news or when bad news does not make a market go down, it usually only wants to go up, and that's pretty much what happened yesterday. And I didn't go up very much, but the fact that it was able to bounce somewhat is, relatively important, I would think. So we'll keep an eye on that as we look at some of these things unfolding for the rest of the day. Hopefully, we're going to have Stan Harley on our guest tomorrow, if I can get through with him, and we'll be able to see that. Yes, Mr. Z does a great job with his technical analysis, and in fact, he's very well read in just about everything. So it's important to pay attention to what he says. There's no question about it. And watch his posts in the room, folks. He's truly amazing what he does. He does a great job, and if you're interested in joining the Tiger Den, all you got to do is go to WWTFNN and sign up, and it's a great way to meet some super nice people, and you'll get some ideas of what these markets are doing. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!